Hi guys, it's Stock Curry, and I'm going to go over our top 10 YouTuber stock picks in just a minute. I'm also going to give you guys a market update as well as a cryptocurrency market update. But first, I just want to give you guys a quick channel update. So I have noticed two things with two of the top 10 YouTubers that we cover, and I decided to go ahead and put up two polls on the community tab. All you have to do is click over to the community tab. You'll see the two polls. I want your advice and your input as to whether or not we should keep these two YouTubers. The two that I'm questioning about whether they're good fits for the channel, one is Trace Trades. Trace Trades does some really great due diligence, some really incredible research. I really like this guy, but he only talks about AMC. And the entire point of this channel was to analyze stock picks. And since Trace Trades is only talking about AMC, he's not really covering stock picks anymore. I just want to get you guys input and wanted to know if you guys want to keep him or if you guys want to replace him with somebody else. The second person that I'm considering getting rid of is Richard Allen. Richard Allen, he's really amazing. He does great news, great updates, but I noticed that about a month ago, he started posting less and less, and now he hasn't posted anything in the last 2 weeks. So I have those two polls up there on the community tab. Let me know if you want to keep one or either of those, or if you just want to drop them both and replace them with somebody else. Now, please, I'm not quite ready for your thoughts on who we might actually replace these guys with. I'm going to actually be posting some more questions and some more polls over the next couple of days with that. Right now, I just want to know whether or not you want to keep or remove Trace Trades and Richard Allen. All right, let's talk about the market overall. What's going on with it? So right now, we have some really interesting things that are happening that are very different from what has happened in the past. As you guys know, high growth stocks got completely and totally beat down over the past few months, while value stocks rose, while these pandemic recovery stocks rose. And now we're seeing a complete reversal of all of that. We're seeing the high growth stocks starting to rise. We're seeing the value stocks, which are, well, let's be frank, no longer value stocks, starting to come back down. We're seeing the pandemic recovery stocks, which were way overbought. They were at levels higher than they were pre-pandemic, which doesn't even make sense. And so those are starting to come back down, and money is definitely moving back into high growth stocks. The other thing that I've noticed about high growth stocks is we have now had over a week of sustained growth on our high growth stocks. And that is really strong. That shows great momentum. And I do believe that this will be a continued trend over the next, well, at least the next couple of months. I think we're going to see some really good things in our high growth portfolios over the next few months. What I have been doing, I can't tell you what to do. I'm not a financial advisor, but what I've been doing is I've been pulling money out of some of my pandemic recovery plays. I've been pulling money out of some of the value stocks I had bought, and I'm putting that money into high growth stocks as I see those start to rise. So that's what I'm doing. You might want to look into that, think about that, doing that also. The other thing is, in the past, at least over the past couple of months, when the Fed has spoken, the stock market is absolutely tanked as soon as he opens his mouth. And here's what's interesting, is I warned you guys, I think yesterday or the day before, that the Fed was speaking this week and we might see the market sell off when he starts talking. Today, we saw the exact opposite. The Fed started speaking and the stock market rose. I was like, what is this madness? It was great. I love it. Of course, it makes me very happy because my portfolio was up. I heard that the stock market was down today and my portfolio was up almost 2%. So I'm pretty happy. And so I hope you guys are doing great with that too. I hope your growth stocks are up. The other thing is, over the past couple of months, I have really discouraged you guys from using margin because of the risks behind that. I said you should only use margin for like these emergency situations where we get, some sort of major news and you want to play it, or in a sustained bull market where you can kind of use that margin to leverage yourself and increase your profits. So I want to let you know I'm going to change that tone a little bit and say it's okay to start using a little bit of margin. I wouldn't go crazy with it, but it is okay to start using a little bit of margin and start putting some extra money into your high growth stocks. I have been doing that. I have been using margin now for buying more high growth stocks, and it's been paying off. I'm actually obviously beating the market right now. Not, super long term, but at least in the past week, because of the fact that I've been using a little bit of extra margin to buy some stock. So you got to be really, really careful with margin, because in the same way that it can exponentially increase your profits, it can also exponentially increase your losses. So you've really got to be careful of margin and make sure you're only using margin in situations where you're, I'd say, 90% sure that your stocks are going to go up. I think we are in one of those situations where we're seeing high growth stocks start to go up. The bull run, the momentum is sustained. And so I'm pretty confident in using margin. I've been doing it. And so I'm going to change my viewpoint on that a little bit. And, with times, things change. And this is one of the times where things are changing. So hopefully using margin will help you guys recover some of your losses a little bit faster. All right, let's talk about cryptocurrencies and where the market is with that. So we're in a really interesting time. If you guys remember back in January when I was talking about the stock market, I called it a speculative bubble. Basically, in a speculative bubble, that is where you find, in that case, the stocks. You'll find stocks that run up massively, way higher than they should go, way faster than they should go, to ridiculous PE levels, just purely based upon hype and nothing else. And then, of course, eventually they're going to crash. And we saw that in February and March and into early April, where all those hype stocks crashed. And so right now, cryptocurrency market is exactly the same. It is a speculative growth market. It is pure speculation, speculative hype market. We are seeing coins like Dogecoin run up massively. Dogecoin was literally started as a joke. I'm not even kidding. It was literally started as a joke. And now it's like the sixth most largest cryptocurrency by market share. I mean, what is going on? It's crazy. Anyway, things like that. What was the other one? SafeMoon. Go read the papers. It's literally a Ponzi scheme. And yet, it has just been rising like crazy. Now look, I don't normally encourage gambling, but I'm going to let you know, even I will gamble sometimes. But if I do, it's on eensy-weensy tiny little amounts. Okay, I did buy some SafeMoon. I know, it's crazy. You might think less of me, but here's the deal. I put the absolute least amount of money, the bottom least amount of money I could possibly put into that thing, which I think was $150 minus fees, whatever that worked out to. Okay, I fully expect to lose all of my money. I really do. I fully expect it all just to be gone. I don't expect to end up with any of that $150. I expect to lose it all, because I really do think it's a complete and total crap coin that I don't think you're going to make money on it. But I don't mind a little bit of gambling for very, very small amounts of money, right? So $150, whatever, throw it. If I lose it, I lose it. I don't care. Because the thing is, on these really, really, really long shots, like SafeMoon, there's a 99% chance I'm going to lose all my money. But then there's that 1% chance that, I'll see 1,000% gain. I don't know. To me, it was worth the risk. I threw it in there. It's kind of like playing the lottery. Well, it's literally like playing the lottery. Your odds of making money on SafeMoon are about as high as winning the lottery. But there is a chance. So you're saying there's a chance. Anyway, the crypto market overall, I'm seeing a lot of similarities to what we saw back in 2017, where we had all these new cryptos flooding the market, where we saw huge spikes in cryptocurrencies. And then what happened a year later? Everything tanked. Major crash in the cryptocurrency markets. Right now, I think Ethereum is up to $2,700, and it was at $1,000 just a few months ago. Bitcoin, same thing, right? It was at 10,000, now it's at like 55,000. Those are the kinds of run-ups that do not last. The cryptocurrency market, it is speculative hype right now. It will come crashing down. Everything will tank. A lot of these cryptocurrencies are going to go down 50, 70, 80%. Some may not even be around anymore. SafeMoon. And that's just what's going to happen. It's just the normal ebbs and flows of the cryptocurrency market. Everybody's talking about cryptocurrencies right now. Give it about 3 years. Nobody's going to be talking about it after the sell-off that will eventually occur. So what am I doing? What is Stock Curry doing? Or cryptocurrency, if you want to call me cryptocurrency, sure. What am I doing right now? Well, I'm buying crypto. Why? Because just like I said in January, during a speculative hype, you can make a lot of money. There is nothing wrong with buying crypto right now and running up and just selling at a big profit. Go for it. Now, you could also have a very long-term perspective on cryptocurrencies, right? Like, you may look at the price targets of some of these cryptocurrencies of Bitcoin going up to 400,000 and Ethereum going up to 10,000. And you may just want a dollar cost average in slowly over time for a long-term hold. And that is fine too. There's two ways to play it. Short-term trading, just running up the speculative hype, and long-term trading where you're dollar cost averaging in very slowly every single month or every other 2 weeks for years and just making money that way. Both ways are great ways to play cryptocurrencies. All right. That's all I have to say about that. Let's get into today's stock picks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I give you both the cliff notes from the top 10 YouTubers, as well as my analysis on what they said. If anything that I mentioned today piques your interest, make sure you listen to who I say mention that particular stock, and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you is that you hit that like button, subscribe, and click the bell icon, and then click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. I also wanted to let you know that I saw something for the first time today that I have not seen in a long time. The NASDAQ futures are up 1% right now. I cannot remember the last time I saw futures up 1%. So I'm really excited and super stoked about that. I think it's going to be another great day on Thursday. All right, guys, let's get into today's stock picks. First up is Ethereum. Keenan Grace alerted us that ETH just hit a new all-time high again on Wednesday. The Ethereum blockchain network is getting more and more use every day. Keenan Grace let us know that the European Investment Bank is preparing an inaugural digital bond sale offering $121 million worth of debt on the Ethereum blockchain network. Keenan Grace also let us know that the price forecasts coming in from coinpriceforecast.com are $5,000 by the end of this year and $20,000 by the end of 2027. Now, like StockMo, Keenan Grace also recommends ignoring the current price movements and just dollar cost averaging in over the next few years. But personally, I feel like ETH is way overpriced right now, and I'm waiting for a pullback. If you look at the monthly chart, you can see just how fast ETH has run up. This is too fast in my mind, and I'm not going to FOMO my way into this. By the way, here's that 2017 rise and 2018 crash that I was talking to you guys about. I do think the same thing is going to happen now at some point. This is going to rise up, and then we're going to crash into 2022 and 2023. Next up is AAPL. This is Apple. StockMo discussed AAPL's earnings that were announced on Wednesday. In short, AAPL crushed their earnings. They reported earnings per share, or EPS, of $1.40 versus the estimate of 99 cents. That's 40% higher than what was estimated. Revenue was $89.58 billion versus an estimate of only $77.36 billion. What's really crazy is that Apple, a huge company already, just reported a 53.7% year-over-year increase in revenues. That is huge growth for a company this large. The other good news is that the revenue increase was across the board, including iPhones, iPads, Macs, services, and other products. Stockmo was so impressed with AAPL earnings that he said he would be buying more AAPL. He thinks AAPL will result in gains of 20 to 25% per year for the next 2 years. Because of Stockmo's price prediction of 20 to 25% annual gains, he also likes leap call options on AAPL as a way of generating even more profits than just buying the stock. Next up is FTFT. This is Future FinTech. Chris Sain briefly mentioned FTFT today. I wanted to talk about it because the technicals have now changed on this stock. Just today, FTFT formed a golden cross on the MACD. Also, we now have 3 days in a row where the candles have closed above the 10-day and 200-day EMAs. The RSI is rising also. So if you were waiting to buy FTFT, now would be a good time to buy. We finally have confirmation of a rebound on this stock. But only buy FTFT if you really believe in the company, because FTFT has a history of rebounding for a few days before dropping again. So there's still a lot of risk with this stock. Next up is HOL. This is the SPAC and they're merging with Astra. Astra is an orbital space launch company. Dead Inside reminded us about HOL today. In his video, he just read everything he said in his prior video, so there's really nothing new to add there. If you're not familiar with HOL and want to know about it, then I recommend you watch Dead Inside's video that he uploaded on Wednesday. The only thing to update you on is that Dead Inside stressed that this should be a long-term hold, and that HOL will not reach its full potential until 2025. Next up is Nio. This is Nio. They're a Chinese EV manufacturer. Stockmo said that he thinks there will be a 3 to 5% move up or down on Nio after they release earnings. He believes the future outlook is good for 2022, with Nio's revenue model moving towards more and more of a subscription service, but he does not expect that to play out in a large role in the earnings for this quarter. That said, Stockmo said that if Nio does drop, then he would wait until day 2 after earnings and then buy in. Since Nio earnings are coming out on Thursday after the market close, that would mean waiting until Monday to buy in. But again, that is only if Nio drops after earnings. Stockmo said that if Nio rises after earnings, he already has plenty of Nio shares, so he's well positioned to profit. Stockmo also reiterated his $60 to $70 year-end price target on Nio. He also said the floor on Nio is $35. And Keen and Grace let us know that the next catalyst after earnings will be their global expansion presentation on May 6th at 4 a.m. Eastern Time, right when the pre-markets open. Nio will be presenting their plans for expansion into Norway, and they might also mention their plans to expand into the United States. There's no doubt that the May 6th presentation will move the stock price in the pre-market. If you don't have access to trading starting at 4 a.m. Eastern Time, then you need to open an account with Webull so that you can get access to the full pre-market and after-hours trading. And you can get 2 free stocks worth up to $1,850 when you open an account using my link in the description of this video and deposit just $100. If you are not a U.S. resident, then I recommend Interactive Brokers for pre-market trading. You can get up to $1,000 in free stock when you open an account with Interactive Brokers using my link in the description of this video. Whichever broker you choose for pre-market and after-hours trading, make sure to sign up using my link so that you can get your free stock. Next up is SNAP. This is Snapchat. Late Tuesday night, Chris Sain explained his SNAP options play. Now, I'm mindful of the fact that Chris Sain released this late Tuesday night, so I'll do my best to analyze this play based upon the information we had on Tuesday. Chris Sain recommended buying an April 30th put at either the $60, $60.50, or $61 strike prices. Keep in mind that at Tuesday's close, SNAP was right around $60.50, so this would be kind of the middle range of where it closed out on Tuesday. Now, Chris Sain did say that he bought 3 $60 puts, and he did let his viewers know that he purchased the puts on Tuesday before he released his video. He said this was a short-term play and recommended getting in and getting out. He did not give a specific time frame though, or when to sell. So let's analyze this based upon the information that we had on Tuesday, and then I'm going to give you my thoughts on what you may or may not want to do on Thursday. So based upon Tuesday, it looks like S&AP was going to follow the trend after having bounced off of this blue descending line on both Friday and Tuesday. It really looked like S&AP was trending back down. Now this is a day trade, so we can't really use the daily chart here, and we really need to look closer at the 1 hour chart. If you look at the yellow lines I drew, we can see quite a bit of an upward trend forming between Thursday and Tuesday, which is bullish. The RSI was flat at the close on Tuesday, so we can't get any information off of that. The MACD was dropping, which is bearish. So we didn't have any agreement in the technicals whatsoever. That makes any short-term trade on S&AP very risky. So to summarize my analysis on S&AP, while I can see what Chris Hayne was seeing on the daily chart as far as S&AP dropping, if we look at the 1 hour chart, which is what's really important when doing short-term trades, it was all over the place and gave us no clear indication of which way S&AP would go at all. So personally, I would not have considered trading S&AP yesterday because the technicals did not agree. Now let's add the information we have from Wednesday and decide what to do for Thursday. On the daily chart, we have weak bullishness on the RSI and MACD. The candles are interesting though because we do have S&AP at a clear level of resistance with the blue line. So the candles point to S&AP going down, but the RSI and MACD point to S&AP going up. So no agreement or determination can be made. But again, this is a day trade for Chris Hayne, so let's look at the 1 hour chart. Now the 1 hour chart is actually quite bearish. This might be confusing since you see the candles rising, the MACD rising, and the RSI rising. So let me explain. Look at this as a swing trade. On a swing trade, stocks swing from highs to lows and back again. If you look at S&AP in that light, the RSI is at the top of where it normally gets before it drops. It's actually over 70, which is overbought. The MACD is near where it gets when it starts to sell off. And the candles are at this 1 hour resistance level on this yellow line here. So on the 1 hour chart, if you look at S&AP as a swing trade, we have 3 out of 3 indicators in agreement. So you might think about day trading S&AP with a put option. But make sure you wait for confirmation. If S&AP continues to rise on Thursday, and especially if it gets too far above the yellow line, say to $63.50, then that will be an ascending triangle breakout pattern, which is very bullish and ripe for a call option to day trade. But if S&AP bounces off of the $62 resistance level and starts going back down, like I think it will, then you might want to day trade a put option. So in summary, the technicals are not in good agreement, and personally I would not play S&AP since we do not have high confidence on the direction of this stock. Now, after the fact on Wednesday, Chris Hayne showed how S&AP dropped from 9:30 to about 9:40 a.m. And he congratulated his viewers who sold right at 9:40 and made a 50% profit. Realistically though, it's nearly impossible to perfectly time the top or bottom on any play. Also, Chris Hayne did not say that he sold his S&AP options, so I'm not sure if he's still in the play or not. Alright, that was a lot of information on S&AP. If any of that information I just talked about didn't quite make sense to you, if you were not keeping up with it, if you're still wondering what all these EMAs and RSIs and MACDs and all this stuff is, and you're saying, you know, Stock Curry, I'm hearing you, but I can't follow. I don't know what you're talking about. I don't know how to read charts. If that's you, I recommend you go sign up for ZipTraderU. ZipTraderU is the best trading course that I have found for new traders like yourself. In fact, I believe in it so much, I actually reached out to ZipTrader to try to get a discount for you guys to help save you guys a little bit of money. And so if you look down in the description of this video, in the description I have a link to ZipTraderU as well as a discount code to get you 15% off. That's something that I reached out to ZipTrader, did for you guys. So hopefully that helps you out and helps you learn how to trade in the stock market a little bit better. And if you want to get some free stocks, sign up for Webull using my link in the description below. When you sign up and deposit just $100, Webull's going to send you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.